First, I just want to thank the organizers of the conference for inviting me to speak today. I'm really excited to do so. And just a brief introduction. First, I'm just going to brief introduction of myself and the firm, how we come up with ideas, and then talk about two ideas that I think are particularly timely. And then I'll open it up for questions. So I'm Jonathan Boyar, the Boyar Value Group. We're a research and money management boutique. It was founded by my father, Mark, in 1975. Today's topic, the Dolan discount, an opportunity or value trap. Here's for the lawyers, full disclosure, both myself and my clients own shares in both of the companies I'm going to present today. I don't think you'd want me to present ideas that I didn't own, so I think that works well for everyone. Okay, so just a brief background. We're both an investment manager. We manage money for high net worth individuals, pension funds, institutions. We're also a research boutique, and we sell our research on a subscription basis to hedge funds, mutual funds, and family office. Our investment philosophy is really simple. We take a private equity approach to public markets. We look at each company through the lens of an acquirer. So for us, not only does a stock need to be cheap for us to profile it, but we need to have an identifiable catalyst on why the stock will go up in a reasonable period of time. And we're more patient than most. To us, reasonable period of time is 2 or 3 years. I'm going to go through very briefly on how we uncover investment opportunities. We're looking, we have a couple of lenses that we look for opportunities through. We love looking at companies that are not included in the major indices. We like complex ownership structures. We're big fans of, let's say, John Malone and his companies, because the way he structures them are so complex, most people just shy away from them. So it gives us an opportunity to use our analytical ability. We also like companies with low levels of sell-side coverage, and with what's going on with MiFID II, et cetera, it's giving us I think, a unique opportunity in the micro, small, and even mid-cap world where some companies are really orphaned. We really like looking at companies that are out of favor by sell-side analysts. We like to say sell-side analysts can tell you everything there is to know about a stock, except when to buy them. We also like companies controlled by founders we believe to be good partners, and that's one of the companies two of the companies we're profiling today. Spin-offs are fertile hunting grounds for us. We've traditionally found a lot of value in this area. I know Joel Greenblatt has written about this, and it's become a popular area to invest in. However, not all spin-outs are created equal. Every summer, we do a thematic piece on an industry theme topic that's out of favor. And last year, we did spin-outs and discovered that they've actually significantly underperformed over the past decade or so. But there are areas within the spin-out world that you can look at where you can hopefully make a lot of money. So that's something that's pretty interesting. And the two companies I'm going to present today are either a spun out entity or the parent of the spun out entity. Just very quickly, our competitive advantages is, we go where others won't. We think investing in micro, small, and mid cap names, or names that are not followed, or areas or ways that you can rebut the efficient market theory. And the other thing is our research. We have been producing research and publishing it since 1975 to some of the world's most sophisticated investors, something we're very proud of. And we think having a dialogue with these investors where they are not afraid to tell us when we're wrong, or ask us, very probing questions, makes us better investors. So I briefly went through, who we are, what we do, and our competitive advantage. Now I know you're here for ideas, and that's what I'm going to talk about. The two companies I'm going to discuss are Madison Square Garden Entertainment and Madison Square Garden Sports. So investment opportunity or value traps. And just a brief background or history, and anyone who's a Knicks fan or a Ranger fan must at this point in time think I'm nuts. As why would you invest in a company controlled by the Dolan family? And if I was purely a sports fan and was judging by the records of the team, I would agree with you. However, we have a different view of the Dolans than most people. We've actually found them to be good partners to invest alongside of. We've been following the Dolans for a long time. We were shareholders in Cablevision. In around 2006, they tried to take Cablevision private, but the minority shareholders voted it down, and thankfully they did, as the Dolans ended up unlocking a lot of value for shareholders. One of the things they did was spin out Madison Square Garden, and because of the valuation and the great assets they owned, we decided to feature it in our February 2010 issue of our research service, and it became a decently sized position for our money management accounts. So why did we think Wall Street was wrong about the Dolans? Is they always assign what people call the Dolan discount to companies controlled by them. You just have to look back at the history. The numbers don't lie. When they controlled Cablevision, they had an industry-leading dividend. They paid a very large one-time special dividend. They eventually ended up selling Cablevision to Altice at a price we never thought they would get. And as I said, they spun out Madison Square Garden as well as AMCX. It's actually interesting. A lot of the issues they're facing, MSGE now and MSGS that they're facing now, are similar in ways when they spun out MSG in the first place. People were worried about the competition from the Barclays Center. To us, there's only one Madison Square Garden. There's a big difference between having a 20,000 seat box in New York City versus Brooklyn. So we weren't particularly worried about that. But the prospect, they were in the middle of upgrading Madison Square Garden, and the price tag went from, I think, $600 million to $1 billion. Everyone was up in arms about how expensive it was, including ourselves. But they ended up being correct that it ended up being a fantastic investment. Like then, the Knicks were terrible. There was a possibility of an NBA strike. Here, there's currently, obviously, because of Corona, we don't know when the NBA season will resume normally. So, there are similarities. And it's amazing if you look at the value of the Knicks and the Rangers, how much they've gone up since 2009. And that's due to a host of factors that I'll talk about shortly. But the numbers are staggering, and we believe that those numbers will continue to increase in value. So the opportunity. On April 17th, MSG split into two, both of which, in our opinion, are trading significantly less than our estimate of their intrinsic or private market value. The Dolans continue to control both entities through super voting shares. While many investors are hesitant to invest in companies with those ownership structures, our opinion is if you have the right partner, it's okay, as long as you're buying it cheap enough to have your margin of safety, which in both cases we believe we do. So what is Madison Square Garden Entertainment? What does it own? So it owns the world's most famous arena, Madison Square Garden, a bunch of other iconic venues like Radio City Music Hall, Beacon Theater, Chicago Theater. It has a very large cash position and valuable air development rights. And it's also in the process of building the Las Vegas Sphere. And that's where the opportunity is because of such negative sentiment. So the sphere, pie in the sky or legitimate opportunity. That's what's really weighing on shares of MSGE. The sphere is the venue of the future. It's going to be built in Las Vegas. It's gonna be really cool. I mean, look it up on Google, MSG Sphere. You'll see renderings, etc. And as a fan, as someone I would love to go, and the concept seems terrific. It's the $1.6 billion price tag that gives us pause. And to me, I think there are better uses of the cash, but we address that in our valuation for the company. So why do we like the name? In this environment, cash is king, and they have $1.4 billion of cash, which should help them ride out the storm, whether the Knicks play next year or not, whether there are concerts resume at MSG next year or not. They have the cash cushion to help them go through. And much of their revenue is also recurring in nature, and have multi-year agreements. So it's a very attractive business opportunity. And we also like the live entertainment industry. Obviously, there are significant near-term headwinds created by the coronavirus, but we're going under the assumption that in a year or two, things will start to go back to normal. And we think there's going to be huge pent-up demand. If you look at, and I realize it's somewhat self-serving, but if you look at comments by Live Nation, et cetera, we think that global demand for concerts, et cetera, will be robust, and millennials are a driving force of this trend. There are multiple catalysts. I mentioned earlier in the presentation, catalysts are important to us. They have a $350 million share repurchase authorization, and we would not be surprised if the company used it. Remember, the enterprise value of the whole company is just a little over $500 million. So this is pretty significant. They also have air development rights that also could be sold. In New York, you have a concept of air rights that are transferable. Right now, obviously, New York real estate is a huge question mark about it, but they could, at some point in time, sell the rights that they have above the garden because they're not going to use them to a developer like Vornado, and they can get a $500-600 million for that. Also, James Dolan, might have an interest in taking the company private, and it's interesting to note before the separation. Silver Lake was the largest shareholder. They owned about 8% of MSG. It's unclear whether if they kept their stake. We're assuming they did, and they have interests in live entertainment. And we would not be surprised if they at a point in time teamed up with James Dolan to take it private. So here's our valuation and how we got there. The current share price, roughly $77. There are, risks, coronavirus, et cetera, uncertainty over Las Vegas. But because of those risks, we took a 50% haircut to the cash balance, and we get to $124 per share on a $77 stock. And, I've been very vocal on the Las Vegas sphere and that it's a boondoggle. I wrote a letter to James Dolan that appeared in Forbes. You can go and look at it. But, I certainly could be wrong. And if I'm wrong, we could be, this $124 price target could prove to be quite conservative. The next company I want to talk about is the parent, is Madison Square Garden Sports. And right now you can essentially buy the Knicks and the Rangers for $3.5 billion, which obviously that sounds like a lot of money, but when you look at what sports teams have traded for, it's not. And and it's a very interesting opportunity. And we think it's curious that they structured MSGS as the parent in this spinoff dynamic. And from our understanding of the law, the parent can be sold at pretty much any time without jeopardizing the tax-free nature of the spinout. And so this is one where, especially if you live in New York, you can see how the negative sentiment on the Dolans there are. I don't think, his heart is in the Madison Square Garden entertainment portion. I think if someone made him an offer, he would sell this pretty quickly. And I'll talk about that more in a moment. And it's also worth noting that Nelson Peltz is on the board of Madison Square Garden Sports, but that might be because he wants really good seats to the Rangers as he's a huge hockey fan. Valuations for sports teams have expanded greatly over the last couple of years. And the Knicks and the Rangers are the epitome of a trophy asset. They're the ultimate status symbol for the billionaire class. And if the Dolans ever put this on the market, one, fans would rejoice, and two, a bidding war would erupt. Assets like these do not come up for sale very often. I mean, I think that the Dolans bought this in the mid to late 90s or early 90s. And James Dolan, in an interview a few years ago, said he's received feeler offers in the $5 billion range for the Knicks alone. And remember, the enterprise value of the company is about $3.5 billion. It's also worth noting that sports gambling and with the coronavirus and how state budgets and the federal budget is going to be very stretched. If there was true legalized sports gambling in New York, I know they have some form of it, the value of these teams would go up even more. That's a huge opportunity. So here's how we got to our valuation. We put a 30% premium to the Forbes value. I know that sounds a little strange, because we're generally conservative in nature, but if you look at the last 50 sales of sports teams, they've all gone on average of that premium to the Forbes value. And so that's kind of where we stood on that. And it gets you to $218 a share. And I think there's significant more upside if sports gambling does become legal. So I want to thank you for your time today. I really enjoyed speaking to the conference. Thanks for inviting me, and I'll open it up for a couple of questions. And if you want to learn more about us, feel free to contact me, visit our website, or follow us on Twitter @Boyar Value. Thank you.
Awesome. Thank you so much, Jonathan.
Sure.
Very interesting presentation there. I don't see any questions, but I had a few.
Sure.
On this. First of all, Jim Dolan, and I say this as a Knicks fan, I know full well how unpopular he is and how horrible the team is. And I get your case that, dividing this and how he has been good for shareholders if he hasn't been good for the team. But, beyond that, though, Jim Dolan has proven to be pretty bad at this whole PR game, right?
I think you're being kind.
Yeah. Because, just recently now, in the last couple of days, New York Knicks refused to respond to George Floyd's death, reportedly angering staff. Knicks owner James Dolan on George Floyd: "We are not any more qualified to comment." That's just like a terrible thing to say. Even if it does happen to be true, you can still at least do the very least. And again, this is just a small example. But isn't there any risk here that as he continues to, suffer these PR blow-ups, that it will hurt the share price, at least in the short term?
It may or may not hurt the share price in the short run, but I think this helps bolster our thesis that why does, James is a very wealthy guy.
Hmm.
He's not, it's certainly no fun for him to be in the post every day doing this. I think this helps bolster our argument that maybe he wants to get out of this part of the business. If he sold the Knicks and the Rangers, then he would just be another, very wealthy person living in the New York City area and
With a band. Don't forget, he has the band.
He has the band. He has JD and the Straight Shots,
Right.
which he can play at Madison Square Garden because he'll still own MSGE. And he can tour with the Eagles, and he's opened up with them. So yes, yeah, he can. So he could do that and pocket, $5, $6, $7 billion along the way. I think that makes a lot of sense.
Hmm. All right, and then the other thing is, and you did address this in the presentation a little bit, but this whole idea of live entertainment. It's okay. There is some news now about the NBA potentially coming back, but this is still a pretty big hit to the bottom line. But you think that's all priced in?
Yeah, I think it's priced in. I mean, one, for the Knicks and the Rangers, the one good thing about being so terrible is that the season really kind of was almost over by the time coronavirus hit. So there wasn't a huge hit to the bottom line. Obviously, next year is a question mark. Do they? Are there games, but just fans can't go in them, and there'll be some sort of hit, but they have the cash wherewithal to go through that and to have that kind of liquidity. So investors should look 2, 3, 4 years out. I'm going under the assumption that in the next 2 years, life goes back to some semblance of normal, and in that case, MSGE, MSGS should be fine. To me, the biggest question mark is the Sphere. You spend $1.6 billion. That's a hefty, or 1.7 to build this thing. Maybe he's right. I mean, he spent $1 billion on renovating the Garden in early 2012, 2013, and it's been a double-digit return on equity. Double-digit return. Maybe he's right on this. I don't know, but to me, that's the biggest risk. I mean, I would encourage people to look at that letter I wrote, James, and the only comment I received back from Madison Square Garden was I referred to him as Jimmy in it, and they said to please refer to him as James going forward.
Classic. Wow. Okay. And then finally, he has had some ownership, and does, I think, continue to have ownership in other companies, AMC Networks and MSG Networks. What are your views on those? And are you equally bullish for the same reasons?
Yeah. Full disclosure, I own both. I think that, in the last couple, AMCX has gone, and they own The Walking Dead, Breaking Bad, etc., as well as Acorn, some streaming platforms. That stock has gone, from 60 to the low 20s, and then about a week or two ago, there were rumors first that Amazon was going to buy AMC, the movie theater company, and then people realized that they were actually talking, or the rumor really should have been AMCX, and the stock has gone up considerably on it. I think it's an obvious takeout candidate. I think the Dolans have really no interest in running this thing. They have great technology. They have good intellectual property. It makes no sense to be an independent cable network. They just don't have the muscle. It's selling at about 3 or 4 times earnings. It's a very interesting company. And Madison Square Garden Networks, what I think could happen is Madison Square Garden Sports. It makes a lot of sense for them just to buy it and to recombine it. Originally, MSGN was part of Madison Square Garden, and they split it up. But if you listen to someone who I respect a lot, like John Malone, he said the two obvious owners for regional sports networks are the teams, or cable net, or a cable company. And I think it makes a lot of sense, especially at these valuations, for MSGS to recombine with Madison Square Garden networks, because if someone was to want to buy the team, they would also want to have the sports rights.
Very interesting. All right, Jonathan Boyar, thank you so much for that presentation. You can see his contact information here. And again, of course, this presentation will be made available to everybody who has attended and registered. So thanks, Jonathan. Oh, sorry, was that? I just muted you. We're going to say something else?
I was just saying thanks for having me, and have a great day.
Yeah, lovely. Thanks so much.